Hey everyone, welcome back to another episode of Eye on Icon. This is a special episode because I have been secretly stalking the TA Club on the Icon Discord, and I've been shouting this out. And you know, some of the guys that do some sensational TA slash on-chain analysis, one Bearish Bull, and you know, sometimes he does speak a foreign language, but I've been told it's TA. um, and then in on-chain analysis, now he is literally, there's the masters and he's above them is Yaso. He's come on the show and he's going to talk to us on-chain. They both warned me that we are just not experts in our fields. Said, no, I'll have none of that. They are the experts. So thanks guys so much for jumping on the show. Let's Bearish Bull, over to you. Welcome back. How are you?
I'm doing fine. Thank you for having me. I appreciate it. It's good to be back. Last time we were here, we were looking at the downfall of our market.
Yeah, look, I can't wait for you to dive in and give us a bit of a macro perspective. But before we do that, I also want to introduce Yaso. Yaso, welcome. First time on the show. I'm really, really happy you're able to join.
Yeah, thank you, Fez. It's an honor to join. Honestly, I was telling you how, I've always watched your episodes. I love it. Yeah, I'm excited to be here. All right.
Thanks, man. Appreciate that. But yeah, look, and you got your own channel as well. Like I know, we got to do something there. I got to come on your channel. I'm keen. You can school me on something, which will be awesome. So, look, guys, love it. For context, everyone. So the point of this episode is we're going to look at markets from two perspectives. We're going to look at it from Bearish Bull is going to give a macro / TA outlook from a monthly and daily, weekly perspective, not as granular from a daily and hourly, because by the time this episode airs, it probably will be irrelevant. And then Yaso is going to come in and explain some key basic concepts about on-chain analysis, in case you didn't know, because you may hear me always crap on a completely wrong take on-chain analysis. So Yaso is going to give that perspective and then actually show us some charts on how he reads it and what it's telling, what the past trends have told us on-chain for Bitcoin and Ethereum. So now, and along the way, we're going to have some fun, so which involves me revealing how dumb I am and constantly asking questions on what they're talking about. So let's dive into it, guys. So Bearish Bull, I believe you're going to take the lead here, and me and Yaso are going to quiz you on random things as you start talking. And what are we looking at? What are you going to show us today?
Right now, we're just going to look at some macro analysis for Bitcoin. Usually my other chart is really messy, so I had to put up a new chart here for y'all. What we're looking at is just the Bitcoin halving cycle dates recorded on a chart, and through that recording, I've been able to identify some cycles. And this is the halving cycles that most people are talking about, most people are referring to. But yeah, this is what we're looking at right now.
So now
you can
Bearish Bull. My first question. When you say macro, can you give me more context? People use this word macro. What can you explain what it means?
Yeah. It's just zooming out. We have macro cycles and we have micro cycles, and the micro is like what I usually trade: the 30-minute, the hour, the 4-hour, and then the macro is the larger movements. It's the monthly, the weekly. It's macro is we're usually moving. Our market is usually moving off of traditional markets. So we look at traditional markets, macro movements, and we kind of get an indication of what we're going to do on the macro here.
Okay, great. No, that makes sense. So yes, and heard a lot about the halving cycles. In fact, just the other day I was having a conversation with my cousin and we were saying, yeah, bear market. He's like, well, now I'm only entering once we get to the typical halving, when the halving happens. Because what's happened in previous timelines, the halving has happened, and after 6 months, then we started to see a bit of a bull run transpire. So I've noticed a lot of conversations have started to trend towards that again. Oh, now we'll enter a bull run again post the next halving cycle. Not that you're going to have answers for me. Okay, what do you got? Bearish Bull?
Yeah, so with that, in regards to that 6 months, on the chart, you can see it's more like 3 months, 3 to 4 months. It's like about 120, 130 days. Okay. And this is, I don't know if you can see me circling this, but this is what I'm looking at. Halving happens, and then we wait like 120 days, and then we see the bull market, the markup phase. We see us go parabolic. But what we're looking at right now is we've topped off at 69,000 in November,
Yep.
and this lines up perfectly with the halving cycle. Since this entrance into the markdown phase, the start of the bear market, we've just been bleeding. And as y'all know, we've had 9 consecutive weeks of just Bitcoin coming down.
Never
but this
happened
is
before, right?
No, this is unprecedented.
Of course.
New times. I sound excited, but this is one of my first market downturns, like
Oh, is it?
over 50%. So I'm just really looking at these coins, looking at the blood, and I'm ready to release capital. I really am.
So as in to start buying, right? That's what you're saying. But as in,
Yes, just dollar cost averaging though,
Yeah.
not blowing my bag.
Yeah.
I am thinking that we're going to bleed some more, especially with the way the Fed is moving. They're keeping their hawkish stance, and we haven't even started quantitative tightening. So I'm thinking that we're going to bleed a lot more, unfortunately.
Okay. So when was the top? What was the top? What was the date that we topped?
November 11th, 2021 is when we topped out, and that's the entrance we had to this markdown phase.
Okay, so technically, post that, we've entered a bear market from there. So pretty much from November. Well, I find it funny that people are we in a bear market? It's like, oh, okay, I don't know how to tell you this if you're asking that question.
We've been in it.
Yeah, we've been in it for a while.
Yeah. Okay, so that's good. So we've been now. Has this downtrend? What you said, it's lasted a lot longer. I recall the 2018-19. That downtrend was, I don't know. It felt like an eternity for me over years. So have we had more time? Well, we haven't had more time pass. This has happened much quicker, right? We've lost a lot of gains much quicker than the last one, or have I got that wrong?
No, so with this chart that you're looking at, I've been identified like how long it takes for the bear market from previous cycles, and all I've done is I've copied and pasted the length of this, and then pasted it over here. So everything's the same length. So what you're talking about with our last downturn, it's the same exact length over here. What we're looking at is we're kind of like a little bit more than halfway through this bear market. And then we still have our bridge that I'm identifying as another cycle. Many people might not identify the bridge the way I am, but usually on the bridge, we have a slow grind up and then going sideways, as you can see.
So where's this bridge now?
It's identified as this blue marker right here. I'm sorry, I thought y'all could see my
no, we can, but sometimes the marker's just vanishing. As in the blue line? Okay. Yeah.
I'm sorry. It's this entire blue square. So you know how I have this red square, the blue square, and then the green square?
Yes. You mean what it's highlighted at the bottom here where the consolidation's happening? Is that what you mean? Or it's just the screen zoomed in from before, that's all.
Yeah, so like you see these like the green and then the red and then the blue and then the green and then the red and then the blue. These are the different cycles that I'm identifying for our halving cycles. And I split it up into 3 different ones. The markup phase, the markdown phase, and then the bridge. Yeah, so we are in the markdown phase, which usually is identified as the bear market.
Yeah. And so your markdown phase, if I'm reading this correctly, the red box, you've got it marked down to bleed out to 19,000.
Yeah, and that's I feel kind of conflicted about that because if the Fed keeps moving the way they are and we see traditional market bleeding, that 19,000 might not hold. And we see other analysts calling for 10,000, for 12,000. I think, I don't know, we could hit that low if that 19 doesn't hold.
Nope. I think we lost you.
Can you hear me?
Yeah, you're back.
Yep.
Okay. Where did I cut out?
The 19,000.
Yeah. So if 19,000 doesn't hold, I'm looking at what other analysts are calling about 15,000, 14,000, 13,000 range.
Okay. So talk to me about, with the Fed. You mentioned a couple of what are your thoughts around that? What do you mean? What are they doing? I know they're talking about the interest rates being increased to deal with inflation and stuff. However, some of the like Raoul Paul, some of his analysis in the macro environment has been um, that before the Fed has had time to really pull these triggers, the markets have started to react and shrink accordingly, where it's happening quite aggressively. So they may not even get the opportunity to keep tightening up these rates before they realize they have to start handing out money again. Do you have any thoughts around that?
Yeah, I agree. But we also haven't seen them actually start reducing the balance sheet. They actually start tomorrow, June 1st of 2022. So that's when we will see them actually start quantitative tightening. From there, it takes some time for that to have some effect on markets.
Yeah.
So we can see like a little dead cat bounce, a bear market rally. And that's what you hear the sentiment all today, people are talking about bear market rally, talking about it coming back up and the Fed having to pivot, but we haven't seen quantitative tightening even transpire yet. So the last time this happened, QT happened, other economists are saying that it took about 10 months before we started seeing the real bleeding happen.
So can you give these two terminologies? When you say balance sheet, what exactly are you talking about there?
Everything that the Fed has been basically pumping capital in,
Okay.
quantitative easing.
Yeah.
So any assets that they are allocating to keep the market propped.
Yeah. So basically, what we saw when they were printing ridiculous amounts of money, they were then putting that money into keeping their bonds or whatever components afloat to ensure that companies didn't go under. And basically, they turned around and now they're not going to do that anymore. Is that kind of?
Yeah, that's
Yeah.
spot on. That's spot on. And like I said earlier, last time we saw quantitative tightening, it took around 10 months before we really saw the bleeding that happened from the quantitative tightening. So, and I'm talking about traditional markets, not Bitcoin, of course. So I'm curious to see what happens, because we don't start tightening until tomorrow, and then we have a 10-month period between there to see if how the markets are going to react.
Okay, cool. And so from your look, I mean, we're looking at Bitcoin, but Bitcoin seems to be doing the same thing as traditional markets.
It's following. You hear people talking about correlations with the Nasdaq and the S&P. The way I look at it is Bitcoin is viewed as a tech stock amongst traditional investors, so it's going to get treated as a tech stock, and you're going to see a lot of when risk gets off, when big money takes risk off, you're going to see Bitcoin coming down. So that's why I'm talking about the correlation with the traditional markets.
Okay. And what about, and this is where I think the on-chain component will get very interesting. So we hear a lot of things like we know Michael Slayer's, well, the figure, that stash is being defended at 21,000 or something I've seen. Now, who knows if these are legit or just people making assumptions here. But even from an on-chain perspective, I recently recall reading, a lot of on-chainers, companies, purchases have been around that $20,000, $19,000 mark. I guess from a TA perspective, or from what you do, Bearish Bull, does any of that have a weighing in when you're looking at the charts, or anything get exposed there, or?
In terms of on-chain?
Well, these key crucial points where these oh god, I forgot what are they called?
Like the supports that you're talking about, like the 21,000 support. You hear that being said because of the support resistance lines on the macro charts. So this 19,000 is. Let me see if I can pull it up real quick. But a lot of people are saying this just because it lines up with how we've played out in the past.
Okay.
Let me turn this off. I got a little bit messy. Sorry about that.
This is what your real charts look like.
So we have the past all-time high, and this is at around 19,000. It was a past all-time high for this cycle back here.
Hmm.
Uh, I'm sorry. Yeah, December 1st of 2017. So we topped out with Bitcoin around 19,000. And this is why you hear this 21,000 being touted, because it's a heavy support.
The past high.
It was a heavy resistance for our last cycle, and now we're looking at it as a support for this cycle.
Oh, it sounds like one of my ultimate lines of defense. TA charts. Okay, got it.
So yeah, that's why you hear these levels being touted. I, for me, like I've been saying since the beginning, I really think we are correlated to traditional markets, and as long as the Fed keeps a hawkish position, we are going to bleed, and we will bleed down to these supports. And if the traditional markets keeps bleeding, those supports will break, and we'll bleed some more.
So, and those supports at the moment, if I'm reading this correctly, you got that around that 19,600. If that breaks, the sort of next support ultimate line of defense is 9,089, and you're going as low as 642. Are these like the ultimate worst case scenarios of each level? Would that be?
I'm not looking at anything below 10,000,
Okay.
just because it seems a bit ridiculous. If we look at traditionally what we've done, we've had an 85% move down from all-time high, from the markup phase down to the bottom of the bear market. So 85% would put us around the 12,000 to 13,000 level, and this is why I'm calling for that. If we hit 12,000, 13,000, and the Fed is still quantitative tightening, and where traditional markets are still bleeding, then we could hit that 9,000 level. But I'm really not entertaining anything underneath 10,000, in my opinion.
Okay, and a little bit of this is strictly chart driven and traditional markets. Something that we probably aren't factoring in that could happen, because we are seeing true adoption happening through this cycle, even with Bitcoin. So if we start to see more countries, do what El Salvador did, could potentially. The news aspect could start playing a factor. The adoption could start playing a factor into a reversal as well, where it separates from a tech stock. Could that also be one of the narratives that could play out in the future?
The great decoupling, right? Yes, but in my opinion, not this cycle.
Okay.
In my opinion, I think we'd have to have that mass adoption, the hyper adoption that people keep talking about, and I think then we will probably decouple. But in my opinion, I don't see that happening within probably the next 2 or 3 cycles.
Oh, 2 or 3 cycles. Okay, damn. Okay. No,
Yeah. Sorry, I'm living up to my name today. Bearish.
Bearish.
The bearish one has come out. No. Look, this is really good, and I've learned a ton, and yeah, it's good to get that perspective as well. But now, one thing you did mention though earlier when you were talking, looking at the charts now and seeing as much as we've bled, and you expect to bleed further, but you also in this mindset of start to deploy capital again. Is that correct?
Yeah, because I came in and I was buying $40 dot. I was buying $30 atom, and I was like, oh my god, these are great prices. So, when I talk about deploying capital, I'm just talking about slowly dollar cost averaging, throwing a couple $100 a week, or just $10 a day, or something, because I have certain protocols that I'm looking at and I'm just so bullish on, and Icon is one of them. I love Icon.
Good. No, I love Icon too. So, and I know Yaso does as well. But good to hear. No, that is interesting. I think I can totally relate, and it's ironic. Like, I went through last cycle. I was literally Yaso when we were setting up. He asked me my story, how I got involved and stuff, and I told him, and I was like, noob. I was like, yeah, this will never end. I even remember people at work who dealt with stocks when I first, in 2017, when crypto was going up, they were like, oh, it goes up until it goes down, and I laughed at them. Crypto's never going down. What do you guys know? This is the great decoupling. This is the stuff I was preaching to them. So, and this time I was prepared. In fact, I was so reluctant early in the bull cycle. Like, I just didn't buy into anything. I'm like, yeah, no, no. Then halfway through the bull cycle, I broke protocol and started getting sucked into everything. And I also started buying $30 Atom. I'm like, this is cheap as chips. Although in the back of my head, I was like, remember 2018? This is kind of what's playing out. Why aren't you listening to me? I was like, shut up, you. And yeah, here I am, back to ground zero. But that's fantastic. I think that's a awesome overview about Bitcoin. Is there anything else, Bearish Bull, before I want to throw it now to Yaso, and I'm keen to give a bit of context for on-chain and see some of the on-chain charts. I do love some on-chain stuff. But is there anything else you wanted to call out from a Bitcoin perspective?
Yeah, just with me being so bearish, I just do want to call out the other side. I do see this. Yes, sir. I do see this this bear market ending in November. Just looking at traditional cycles, it would line up. Yes, sir. This November, and like I said a little bit earlier, with this bridge, this blue area that you're looking at, we usually see a slow grind up. It would be nice to to get some momentum after November because of elections and because of traditional markets bleeding out, however bad they will. And I could see like a little pivot and us kind of grinding slowly to all-time highs. That's just me being very optimistic. But usually, like I said, with the bridge, we usually grind to all-time high and then we move sideways, or we're just moving sideways. But yeah, that's what I just want to give the other side. I am Bearish Bull.
Right. It's funny you mentioned that, because my thesis for like just the third quarter of 2022, right? Because the United States GDP, the second quarter, it's going to get announced at the end of September. What is it? September 29th. And for example, if it's negative, then that's going to officially put the United States under a recession, right? And typically, if that happens, we're probably going to see a large capitulation event happening. And typically, when that happens, it starts the next bull run. So if that does happen, then November does come into play, where that the market will probably still look really scary, but that's probably like the best time to that's like the start of the next bull run, right? That's the very bottom. That this is just a thesis though, but
of course I'm writing this in my blood. Yeah.
Right. No. And then of course, let's say, for example, let's say the GDP was positive, and if it wasn't negative, then again, that's going to rally the market, which is going to kind of fall around that time frame that you're talking about too, the October, November. That's probably going to start the next rally. Depending on how GDP is announced. So, yeah, I actually didn't see what you were talking about, but then now that you're explaining that, I'm like, oh wow, that actually hits my timeline too. So I was like, okay, I could see it falling in place.
Look at this. TA and on-chainers agreeing. This is where unity happens on Icon. I joke and kid, but this is sensational perspectives. And guys, November, it just feels too soon for kind of a bottom. I don't know. This is where I keep coming back to. That's why I wanted you to highlight when the bear market started, which is the top of the bull market. We're not even a year in.
Yeah, actually, I was looking at the previous cycle, right when you were asking about the timeline. I think the 2017 cycle ran from December all the way until like November or something like that. So December 2017 all the way till November 2018. So that's about like 11 months.
Yeah.
So if we look at it now, let's say if it's November, then if we're predicting October, November, then that would probably put us within the same time frame, right? Because Bearish Bull, I think you had us topping out in November, right?
Yes, sir.
2021. Yeah, and then the bottom of the market might possibly be October, November of 2022, which I see that possibly happening too. Yes.
So for our bear cycle for the 2017 through 2019, it's around 396 days. And then you kind of overlay that over here to our current bear cycle. We're about like a little bit more than halfway through that. And that's why I'm looking at November for being the end of the bear. Just because I'm looking at previous bear cycles and then overlaying it and throwing it in front on our current bear cycle.
Yep. Okay. Well, I don't know. It just doesn't sound as bad to me. Like I'm feeling all of a sudden relaxed. I'm not feeling bearish at all. So, look, I'll tell you what. This is great. Bearish Bull, I will like you to let's close out with an ICX perspective, if you don't mind. I know it's all correlated, but let's give Iconists a glimpse at that. And let's now jump over to Yaso. Yaso, over to you. You know what we want. I'm keen to see your perspective. Give a bit of a context on chain and what you're looking at, and go. Your show. I'm gonna. All
right, sounds good.
Am I just real quick? Am I stop sharing?
Yeah. Stop sharing. I think when Yaso shares, it will.
Let's go. Beautiful.
Okay. All right. Can you see it?
Yes. Looks good.
All right. So right in front of me right here is just a Bitcoin chart. And then what I'm going to do is I'm going to present some very bearish stuff, right? Basically, so what on-chain is basically we interpret, basically on-chain is really looking at the data from the blockchain, right? So when there's like platforms kind of like Crypto Quant who goes on there, they're able to extract that data and then they put it into charts where we can actually interpret the data. So what I kind of want to do here is that, this is the Bitcoin chart. I'm going to kind of look at just like the moving average 30 for the amount of like address counts, right? So what I'm seeing right here that's happening at the market right now is the number of addresses, like in terms of like counts, doing inflows and outflows going into an exchange has dropped off tremendously. So basically what that's really telling us is that there's been a loss of interest in the in Bitcoin, right? There's not like a lot of like people sending in Bitcoin from their like personal addresses onto an exchange. There's also not like a lot of like people pulling like Bitcoin out of the exchange and onto their wallet. So it's kind of like we're in a situation where we're definitely seeing a huge loss of interest. And again, the last time we saw like that huge downward spike of like address counts, or like basically this is kind of like it also measures the transactions going inflowing and outflowing into an exchange. Basically the last time that it dropped off, after a while, because you can see it dropping off right here. After a while, it took a little bit, a little bit of time, but then eventually we hit this like final capitulation event here that happened in November of 2018.
So this blue line is of wallets, number of wallets, or is it inflows and outflows?
Number of wallets, number of addresses coming, going into an exchange.
Okay. So addresses coming in. Yep. So when it's up, it's a lot of
there's a lot of interest.
Yeah, outflows in terms of right. Mm-hmm. Yep. So just in case anyone listening, so the blue line, if it's going up, it means a lot of Bitcoin's leaving exchanges to different addresses. When it's coming down, is that have I got it right?
So basically, so this chart specifically here looks at just like the number that's basically the volume.
Okay.
So it's the volume. So when it spikes up, there's a lot of volumes of address, a lot of like different addresses making that transaction, and then when it drops, it means that there's less addresses or wallets out there making transactions on there.
So inflows and outflows irrelevant. The blue line, it's strictly a transaction. The amount of transactions.
Correct. Yep.
Okay. Cool.
Correct.
Sorry.
And then what we're kind of seeing, what I'm basically waiting for is basically this right here, right? Kind of like for Bitcoin to kind of go to move sideways for a little bit before it drops off. This is assuming that the Bitcoin price is going to react the same way that it did back in 2017, right? So if we look at that here, if we let's if I say this bottom, or we don't know when that's going to bottom, but if I'm going to put in the same time frame here, we're looking at about, I'm going to just move this over. Or I mean, what I'm trying to say is that we're still waiting. I mean,
it hasn't. It
hasn't bottomed fully
Yeah.
yet, in my opinion.
But
right?
looking at, based on what you're saying, it hasn't bottomed. But even looking at that the blue line itself hasn't steadied or seen a bit of.
It hasn't steadied yet,
and it's almost down to. Is that accurate in terms of?
Or
it's literally almost back to the old days.
Correct. Yeah, it's all the way back to like So now what I'm doing is that I'm showing the exact data here.
Yeah.
So this blue line is the moving average, and if I show the actual daily chart of that, we're actually like down here, right? So
okay. It could be steadying.
Yeah, we could be hitting that steady point, right? Because we're it's like around here or something like that here. So it really depends on if we start seeing this. So basically, what I'm looking for from an on-chain perspective is, when looking at this here, I'm looking for this to kind of steady out. I want to see it move back upward, because that kind of measures the interest level, right? From a trading perspective, right? That users are looking to trade, or they're trying to do some transactions, right, on a crypto exchange.
Well, just doing something, right? Like
doing something, right?
That's interacting with the chain and causing movement.
Correct, right. So right now, like from that perspective, it's been kind of like I know there's perspective out there saying that Bitcoin has been in the bear market since May, and that's due to this right here, right? Because we spiked up, and then transactions or active addresses, it really just dropped, and then during the second half of 2021, we did have this movement upward, but then it didn't reach the level of what it was before, and then it kind of just started dying off down here. Now, I kind of, in a little bit here, I kind of want to explain what was happening during this entire time right here.
Yes.
And actually, it's funny, you talked about inflows and outflows, right? So I have that chart right here. So, oh no, give me a second. I'm gonna have to sign back in.
All good, all good. It's interesting. While you're doing that, the Bearish Bull, keen to get your take, but what I notice, like when you're looking at the transactions, we're almost down to we're down to the earlier days. I would have, if we were truly what you were talking about, Bearish Bull adoption, that mainstream adoption, I wouldn't have expected, even in a bear market, the activity to go back as low as the old days. It should have settled a lot higher, because we've got more adoption, we've got more players, we've got more wallets activated. But it looks like it's just almost reversed back to, the old days.
I actually have my opinions on that. If I'm sorry for cutting in, but so I personally feel that large holders, they tend to just hold their Bitcoin, right?
Yeah.
They'll buy, they'll talk about it, but a lot of times they don't do the actual transaction on the Bitcoin blockchain, right? And from my views, like blockchain today, like from a technical perspective, it's not at a point where, or from my perspective, it's not at a point where I see it being the back end of institutional, like the technology side, right? They're not. I don't see them using Bitcoin, or not Bitcoin, but blockchain in general as a back end database. A lot of it, like, I still feel like we're like maybe like 5 to 10 years out from seeing that happen, because right now a lot of the blockchains are still in that, like, they're still building up their infrastructure, right? So 2017 was really like a white paper cycle. There were some projects being built out, and then now in 4 years later, 5 years later, a lot of them are starting to be able to come out and support, like, smart contracts. But we're still like I see this kind of like as a proof of concept stage. So if these blockchain platforms can prove that they're able to support all these contracts, all these dApps running on top of it, then, and like in a way where it's actually scalable and interoperable, right? Especially what Icon's working on, and then once we start seeing that and the space can actually prove that, then that's when I think that institutions will probably start coming in here and trying to like integrate with the blockchain space. Now, this doesn't mean that they're not like testing blockchains in the background. They definitely are, but they're not like for them to have that as like a legit backend.
Yeah.
I just don't see it happening yet. So
No.
that's why that's my theory for why we're not seeing a lot of transactions. So.
Yeah.
And I was just gonna speculate. It would make sense because a lot of this run up was from big money entering in this cycle, you know. So us going back down to that activity level would kind of correlate with big money coming in and big money exiting. Because with the chart that we're looking at earlier, the macro chart, you can see just from I had it identified. There's like a couple of different stages where we're just sell-offs, and that's usually big money movement, you know.
Okay, no, that's good. And one of the things, so as well, while you were talking, I guess the institutions they bought, and they're probably holding. They're not doing anything else, and that's why on-chainers will then start looking at age and whale wallet ratio versus what their movements are doing, because that will start giving a bit of a signal. Well, are the big money holders who entered the market, are they actually holding, or have they decided to pike and sell up?
Correct. Right, and it's funny you're mentioning that because I'm going to get into that in just a little bit here, right? So this right here is the inflows for basically all the cryptocurrency exchanges out there, right? So this spike right here that was basically the Luna crash, right? The Luna incident. We saw a huge amount of inflows coming into exchanges. This over here was the May of 2021 crash. We saw the huge spike of inflows for that too. And over here, this was the COVID crash. This was the flash crash of that. Oh, yes. And this right here, I'm not too familiar with what this is, but I know that at that time price went up. I think someone was just looking to sell their crypto here. But this over here was the final crash of the 2017-2018 bull cycle. Or basically, not the bull cycle, the bear cycle, because this is, the bear cycle. This was the final capitulation event. And this right here was folks, whales transferring their Bitcoin into exchanges to sell the pumps. So what I want to do is I want to look at this from a smaller time frame, right? So I'm going to go right into the block. I'm going to look at it from a block perspective, right? And want to make sure this is right at.
So when you say block, is this with Bitcoin? So 10-minute block times?
Yes. Yep.
Cool. And Yaso, these are the inflows, right?
These are the inflows. Yep.
Okay.
I'm trying to get this right to approximately.
The first chart you showed us really good. I like that.
I'm impressed with every chart, guys. Like, I mean, not as many lines as I would draw on it, but yeah.
All right, so this is the I could just say like the minute chart, the 10-minute chart, right? Block chart. So what I did was above this line right here, this dotted line right here was is the 30K BTC price level, right? So we're looking at this is March 12 over here, and then to current, right? And then down here, this red line here, I'm going to try to get this a little. You can see this, right?
Yeah, perfect.
Okay, so anything, like any of these inflows that breaks above this line right here is 1,600 BTC or higher. All right?
Getting sent to the exchanges.
Getting sent to the exchanges, yes. So these are inflows. And the reason I look at inflows, and I actually look at this a lot, is because it tells you there's incoming sell pressure or possible sell pressure onto the exchange, right? Because on the exchange, there's going to be traders, right? Buyers and sellers on there. But then when we start seeing a large amount of inflows coming in, that's telling us that there's additional sell pressure incoming. So 16,000, or not 16,000, but 1,600 BTC, that's approximately, it's almost 50 million. So that's actually a lot of money coming in. And right here, we notice that every time, like, for example, like this right here, right? this was like the price when price breaks above that 30K, right? When we see that, look at how many inflows came in.
Yeah,
Like
yeah.
everything that
Huge
came through here
spikes.
was, yeah, it didn't all come in at once, but then if we look at this right here, like look at how many of these started breaking above that this 50 million barrier, right? That's the 1.6 thousand or 1600 BTC.
Yeah.
Same thing happened here too, right? So you see this here, and we might only see one of these break up really high, but then if we look at it down here, right, within this range right here, there's more inflows coming in. Here, same thing kind of happened, right? So these inflows are, they're not as much, but you start seeing them coming in, and then and so forth, right? So
it's interesting. Just before that box as well, like I realize I can move my mouse over. Just this period before the box where there wasn't much. Everything it kind of had dropped, and that's where you kind of see the price accordingly kept rising, and it's reached a certain point, and then bam, it's inflow city.
Right. Now, what's really interesting about this time is I'm not seeing a lot of. I mean, there's inflows, but like if I compare it to over here, I think if we look at the inflows, there are some that does that there are some that's that there's some inflows coming in, but it's not like this here, which is kind of surprising, right? So this we might see this even pump up a little bit higher too. No, of course, not financial advice, right? And the reason why
Bye.
I'm right. The reason why we look at like 1600 BTC or higher, again, it's over 50 million, and I kind of almost want to say that this is potentially institutional investors, right? Typically, retail investors don't move that large of BTC at once. And then when we start seeing like large movement of BTCs like this here, typically we identify that as institutional investors.
Yeah. Interesting time for them to be selling.
Right. It's actually it was really interesting because I know that right when it dipped right there was a lot of like folks going around saying that the whales are buying the dip, but then when I looked on chain, I was like, oh, I don't know if that's the correct situation. I'm like, maybe, I mean, we're gonna have to wait for it to play out, but there was a lot of selling down there. Next up right here, I kind of want to talk about like the taker by sell ratio, and basically what that is that it looks at the buy volume for BTC, and basically they put that over the sell volume. So basically on the chart right here, if this is going upward, it's basically telling us that there's more buying activity happening within the market. So when you look at this right here, it's actually really interesting, right? So if we look at this, it's the buy activity typically happens during the a bear, like, or when the price isn't as high. If we look at this up here, like during this, this was the first half of 2021.
Yeah.
And when price was up like that, what was actually happening on chain was people were actually selling, right? People are selling, and then of course that capitulation event happened here, and then of course buying happened again. And actually, I'm gonna move down here to the MA60 on the bottom panel here. This will be a little bit easier to read, right? So you can see selling happening when price was high, and you can see buying happening when price is low. And then when price was up here, you can see that there was selling happening.
Yeah.
Right. What was really interesting about the first quarter of 2022 was that there was actually a lot of buying happening, but then price didn't reflect it in a way where I would kind of was expecting. It wasn't pumping like the way that it did during the second half of 2021. So in my opinion, I think that's what this was driven by retail.
Okay.
Typically, if institutional investors are jumping into the market, then we see something kind of like this here, right? There's like a bigger pumps because there's larger buy amounts. However, this drop off right here, we didn't see something kind of like this down here, right? There wasn't like a huge drop off. There was, it's kind of just, I mean, down here was kind of like steady, right, for the MA60. But then if we look at it from a shorter time frame, like the moving average 7, 14, and 30, we're actually seeing like buy, like the buy ratio starting to increase. So we're in a phase where there's actually more buy activity. So we see the moving average 30, it's slowly trending upward. The 14's also trending upward, and then the 7, compared to what it was, it's trending upward. So typically when it trends upward, price reflects, right? So I remember I wrote a recent article that we may see a potential price rally in June. Now, again, not financial advice, but in June here, again, I think Bearish Bull talked a little bit about like how we saw like was it 9 weekly candles of red?
Yes, sir.
Yeah, and then right, and I think this is probably indicating that we might potentially see a green candle coming up, especially with the buy volumes increasing. And yeah.
Yeah, look, I find it's very interesting, this retail call out you've made, because if you look at the buy over the 60-day average, it's almost on par with the institutional run up before that. So
Correct.
And given the lines are literally identical in terms of from that ratio. Yeah, very interesting how it didn't have as much as an impact.
Right. So right now, what I'm actually doing is I'm kind of trying to observe like the buy ratio, right? So if it's going up, and then basically if the I want to see the price shoot up. If it's not shooting up, then it's telling me that institutional investors are probably trying to stay out of the market for the time being.
Mm-hmm.
However, I think that kind of falls into what we were talking about earlier about like the U.S. GDP, right? The second announcement. So I personally, all right. So personally, I'm trying to exit all of my positions by or in August. And again, not financial advice, but a lot of it is because I think a lot of investors are gonna get scared, or like there's gonna be a lot of fear in the market due to the announcement, right? And typically, a lot of the news doesn't hit the market until like maybe 6 weeks, a month, 6 weeks before the actual announcement of it. So I think what's going to happen is in August, or sometime in August, we're going to start seeing like Medium articles, or like blogs, articles, like even YouTubers coming out saying that, hey, be careful of the announcement for the GDP, right? And then that's going to cause a market panic, in my opinion, right?
Yeah.
So I think we might bleed a little bit during that time. So I tend to try to not touch the market if if I think that there's going to be a huge amount of panic during that time. However, in the short time frame, again, if we look at the take or buy sell ratio, there's definitely more buying happening in the market right now than there are selling. So
I mean, if we're really simplifying it, it's buy the dip. The dippity
sell
dip.
the top.
The dippity dippity dip. So we're the dippity dip.
Keep buying the dip.
We have one more dippity dippity dip left. And yeah, so cool. No, okay. This is awesome, yeah. So really, really appreciate it. Is there anything else on this front?
Actually, let me show you one more chart. So I'm going to show you the spinning chart, all right? So basically, here, let me look at it from a huge longer time frame, right? So right here, 1 second here. Okay, this looks not good, but here. So basically, the top chart, this is Bitcoin's price. The second chart right here, holders holding between 10 to 100 BTC in their accounts.
So sorry, that second chart, when it's climbing, does it mean people are dropping, or more people have between 10 to 100? People, obviously.
So what I want to show here is spending, right? Okay. So this is BTC spending. So basically, when there's spikes in this line right here, it means that there's more spending happening within that population. And right here, the middle, this one right here, this is holders holding between 10 to 100 Bitcoin. The second one right here is holders holding between 100 to 1,000 Bitcoin. And then down here, holders holding between 1,000 Bitcoin to 10,000 Bitcoin. And down here are holders holding 10 10,000 Bitcoin or more. And we can see that in the second half of like
It's okay.
this is
Don't
for
worry. Ignore the
a
writing.
smaller time frame, but yeah, so ignore the writing for now. But like this right here, basically, if we look down, right? If we look down here, we can see spending spike for all of these categories, right? And this is really important because these supply distribution groups are actually, they hold probably over I think it's like 95% of the entire Bitcoin supply. So if we start seeing that they start spending, then that's telling us that, oh, hey, it's either they're moving their coins to another address, or it could be they're moving their coins onto exchange. And if we look at this right here, right? So if we look at it over here, everything down here, this was right before the Luna crash, right? Right before that happened, you can see all the spending spiked, right? So if I go into like the hour time frame, yeah. So if you look at it from the hour time frame, like I believe the Luna crash was like right here, right? This was like the first time they moved their BTC out. What was very interesting was even before that, there was a lot of spending happening in holders holding between 1,000 to 10,000 Bitcoin, right? And then when that happened, of course, the rest of the market started reacting, right? What's very interesting right now is that if we look at holders holding over 10,000 Bitcoin, they're actually not spending right now. So that's what's interesting. However, holders holding between 1,000 to 10,000 Bitcoin, they started spending it around here, right when the price spiked up again. So this is something that I'll probably like monitor, but then it's telling us that, hey, they're moving their coins, they might be selling it, be aware. And yeah, so basically when you see the spending go up, like, be careful.
So super whales, the 10K, which is not me, they seem to be unaffected. But I noticed that as well. The 1K to 10K, they seem to be the most active of the bunch, even of the lowest holders.
Mm-hmm.
Yeah. Okay. Interesting. Yeah. So if there's if we see a sudden spike in spending, it's implying it could be selling. But
yeah, correct. It's either they sold it or they transfer it to a different wallet.
Okay.
It's it's either one of the two. And then from here, of course, we go into like the inflows, right, to try to check and see if does the inflows match it.
Yeah.
And then over here, I was like, oh, hey, there were two, like a few spikes, right? If we go back over here, like these spikes right here, this could very well imply that some of these inflows came from whale holders or holders holding 1,000 to 10,000 Bitcoin.
Yeah.
So
yeah. Cool. Okay.
Yeah.
No, that's really awesome. So now when you hear me sometimes talk about on-chainers and give a terrible overview of what they're trying to say, today's episode you heard so break down certain components of the on-chain perspective and what it's talking to and how it's looked at, and it'll help give more context. Really appreciate it, man. That's awesome. Okay, look.
This is alpha. I'm taking notes.
Yeah, there you go.
Yeah, I was gonna say the cool thing about on-chain is that, like, let's say if I was charting this out for like TA, right? So we might, let's say, we could draw a line, right? Let's say we drew a line and oh no, okay, let's say I'm trying to like draw this resistance line like right here or something like that, right? We like on TA, like you'll probably guess that, oh, it's hitting resistance, it might be time to sell, or we might sit here waiting that wait to see if, like, we're going to break above it. But with on-chain, like, you can see exactly what's happening here. So when it doesn't break above resistance, like, we could see that, oh, that's because there's all these inflows that came in and decided to sell that resistance. Do you kind of get what I'm saying? It's kind of like we see exactly what's happening that's causing us to get rejected. So
no, it makes complete sense. Awesome. Okay, now just in the interest of time, let's close this out with a quick ICX icon view. Bearish Bull, do you have that?
All right. Yes, sir. Let's get it cracking.
Let's get it going to 50, isn't it? I can feel it. just before the chart's up. Now, just a bit of perspective as well. The only reason Yaso isn't bringing up an on-chain perspective for ICX is they only do it at the moment. On-chain data only exists for Ethereum, Bitcoin, and a few of the other chains, right?
Mm-hmm.
So that's why we're not seeing it. Otherwise, Icon would be on here, and we'd be doing some deep diving into that as well.
Correct. Right.
Okay, Bearish Bull, what you got for us?
All right, can you see my screen?
Perfect.
All right, beautiful. So what we're looking at right now is a 4-hour. I know you want to look at the macro. My macro is a little messy on this chart. So if we were to look at the monthly, let's just look at it real quick so I can show you what I'm looking at.
Oh, damn! You take the cake for lines. Look at all these price levels.
So this is kind of why I want to zoom in a little bit.
Yep.
So we'll look at the daily, and we will see what kind of supports we're looking at beneath us and what kind of levels we're looking at above us.
Yeah.
All right. We're getting some good support off this 35 cents. As you can see, we bounced off 28, and we are kind of just trending up here above this 35. Our next target would begin above this 40, and then testing the daily resistance at 44 cents, 45 cents. And then just going into the 4-hour just for a little bit closer look. So you can see how price action is respecting these levels. Zoom out a little bit. All right. Yeah, so as you can see, we're kind of just ranging between 40 and 37 cents. We're getting rejected right now for this 40, and it's looking like we might catch half back of that, like around maybe 38 cents. But the supports that I'm looking at, if we bleed some more, we're looking at 37, of course, and then 34, and then 29 and 28. 28 would be what we bounced off of from that whole Luna debacle. When Bitcoin was bleeding, it's like around 80,000 Bitcoin that was sold. I think that's like a couple $1 billion.
Yeah.
Go on. I'm sorry.
No. Carry on.
So beneath that 28 cents, which is like, max pain for us, we're looking at 21, and then 17, 14, and then 11. And this is, I'm just showing these because we were talking about all the bearishness we were earlier. If we bleed at 19 and we cannot hold, I'm looking at us break 28 and then maybe start testing these lower levels.
Yeah.
And this is my max pain. This is my most bearish outlook. But for the other side of that, let's say, because I do like how Yaso was saying, I do see like a little bounce, a little bear market rally, day cap bounce, however you want to look at it. As long as Bitcoin holds 31 and we start, getting momentum above that, we can easily see Icon start testing this 45 and then come and test this 200 moving average. And that should put us like around that 50 cent area. And you see, we had a really big deviation like off of this 54 cents. So holding 50 would be nice. And maybe we can get some more momentum to get back into this macro trend above 50, 54, 55 cents.
Yeah. Okay, cool. No, I think that's great. Good outlook for all the iconists looking in if they were curious. And those lower, the bearish sentiment, those lower milestones would very much be correlated to those lower Bitcoin points you had as well, right?
Yes, sir. Yes, sir.
Okay.
So, I mark up support and resistance just so I can see where it's looking like we bounce. And depending on the color of the support or the color of the resistance depends on the strength. So, the weekly is going to have more strength than the daily, and so on and so forth.
Yeah, no, makes sense. Okay, cool. Look, this has been fantastic, guys. Once again, really appreciate you coming on the show. I think let's make this kind of through this bear market. Let's make it a
Bear
regular thing.
market.
I think these kind of insights. Well, I love it. I actually have thoroughly enjoyed listening to takes and learnt a ton. And I often, so for example, I made the recent Bankless did a podcast where Paul Raoul came on and he gave a macro environment perspective, which I've referenced a little bit. Like, I thoroughly enjoyed that podcast because I got so much more from it. Like, I just got a lot around what's happening with the markets, and even today in our conversations, that's how I felt. I got more than just looking at a chart. I got a lot more perspective from an on-chain perspective. Bearish Bull, I really appreciated you taking the huge timeline and showing the buckets that we're falling in, and cross-referencing it with the past, especially the red zones. And it's quite intriguing that you both have lined up to that end of November kind of piece where you expect and hope we see a bit of a rebound. So, yeah, solid stuff, guys. Really, really enjoyed today. Thank you for coming on. As always, it's not financial advice, everyone. They said it repeatedly, not financial advice. But yeah, so it's knowledge. Knowledge is power. This is what it's about. So hopefully everyone listening has learnt. Like, share, subscribe. Any closing words, Yaso?
I just want to say thank you for this opportunity. Again, I was telling Fez how much I was like a fan of his channel, right? So I'm one of those guys that binge watch it. So I'm happy to be on here.
Thanks, man.
Yeah, I'll go ahead and second that. That's how I felt exactly with the first time I came on. Thank you, Fez, for your time. And there's nothing more beautiful than when some analytics have some confluence. So I appreciate your time, Yaso. It's nice learning some on-chain analytics.
All right, thank you, Bearish Bull.
Yes, sir.
Guys,
Finally happy to meet you, right? Because we all see each other on Discord. And
yeah, that's how I'd see Bearish Bull, and then I'd see your perspective. I'm like, wait a minute, this is great. But look, guys, I appreciate the comments, but honestly, I really am grateful y'all came on the show and shared your insights and stuff like that. It's like, thank you. The honor has been mine. That's what I'm trying to say. So thanks again, guys, and until next time. Chat soon.
Cheers, man.
Yep, thank you.